Welcome to NASDAQ Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at NASDAQ. Joining me at the market site in Times Square, we have Andrew Channon's back with us. He's the co-founder and CEO of Precure ETFs. We are going to take a look at investing beyond earthly limitations as he joins me for World Space Week. Andrew, it's great to have you back with me. As always, tell us more about World Space Week.
So World Space Week is an event that was co-created with the UN, and realizing how space isn't just something that is an American pastime or industry or Russian or Chinese, but really is one of the most collaborative industries in the world. And without global understanding, education, and collaboration, something that we would still be in its infancy as far as an industry is concerned. So this was something that was actually created several years back, and as last year, there were over 5,000 events in over 80 different countries. So you can kind of see the excitement and the interest in this topic, and it's fantastic to see the overall global response to it, and it's something that's been growing every year.
It's the globalization of the space industry for sure. And there's some interesting stats around the space economy. By 2040, the global space economy will reach $1.1 trillion, according to Morgan Stanley. That's a big number, and it represents a lot of growth.
And according to Bank of America, they believe that the space economy by 2045 will actually be a $2.7 trillion industry potentially. And actually, the most recent 2018 numbers came out from the Space Foundation showing that 2018, the space industry was roughly valued at $414 billion. So we've seen some pretty impressive growth year over year for the industry. And what I think is most interesting is back in the day, this was something that was almost entirely pushed by government spending. And now that only makes up about 20% of spending. So you still have a strong demand and spend from governments around the world, but it's something that we're truly seeing the commercial interest really picking up and taking the lion's share of the growth of this industry.
As an investor, how can I get involved with investing in the space economy?
I think historically it's been very difficult for individual investors or even institutional investors to get exposure to the space industry, and it's something that's constantly evolving, and there are companies from around the world specializing in different things, which was why when we created UFO, the world's first pure play global space ETF, I thought that this was something that made a ton of sense to be in an ETF where an individual investor could actually purchase one share of UFO and get exposure to over 30 publicly traded companies from around the world specializing in all different areas of the broader space economy.
You have to give the issuers credit for how creative they are with the ticker symbols. What are your top 5 holdings? What are some of the companies that you're investing in?
So there are companies like SES and Laurel and Intelsat and Eutelsat. You'll notice the SAT word in a lot of these company names, and it's something that a lot of investors don't actually have much exposure, if any at all, to in their portfolios. And what you're getting when you're investing in UFO currently is roughly 30 companies that are doing things like the production, manufacturing, and operation of satellites, creating rockets. Technology to be used in future technologies like reusable rockets and microsatellites and things like that are all things that we're seeing growing in this industry, and it's very difficult to try to pick one or two winners. So by being able to get this instant global diversification, it's a way for an individual investor to get exposure to the broader space industry.
Are there any legacy defense names in there, like a Lockheed Martin or a Northrop as an example?
Absolutely, those names are in there, as well as other broad-based, what we call diversified names like Boeing and Airbus that clearly have a strong presence in the space industry. But because it's not pure play, these non-pure play companies are kind of grouped into this bucket that has roughly a 20% or less weight in the fund. So really you're getting roughly 80% or more of the fund is focused on these pure play names. So you can't just exclude a company because it's not gaining more than 50% of its revenues from the space industry when there's such big players in space, like some of these diversified aerospace and defense companies. So you do have that exposure, but the fund isn't completely reliant upon those more diversified names.
All right, Andrew, thanks so much for joining us for World Space Week. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.